And I'm just going to talk. We're going to have sweet tea. And we're just going to talk. If you're looking for an ETF review, no, not now. Sweet tea. Saturday night. I want to post this Saturday night. We're going to be good. Big Brother's on tomorrow night. I'm not going to have time for you. Sorry. Sweet tea. Enjoy life. Anyway, I'm going to take notes. I've tried this video a couple times and getting so old, I can't even remember if I talked about the subject before 5 minutes ago. So we're going to talk about Bitcoin. I'm going to write that down. Bitcoin. So Bitcoin is going to go up with the M2 money supply. They're going to spend money. The government's going to start printing it. If you're using TradingView, you can look at the M2 money supply. It went down. We really had that crypto winter. You can see it. You can literally look at the M2 money supply and watch them sucking money out of the system. They really flattened it out for a long time. Really flattened it out for a long time with the M2 money supply. As soon as that starts going back up, that's going to raise all boats. All stocks, Bitcoin, the whole 9 yards. So if you're not tracking the M2 money supply or don't know what I'm talking about, you can Google M2 money supply and you can see the chart. And then you can go, is that why stocks go up? Maybe that's why they're trading at higher PEs than they did way back in the day, right? I mean, some of the formulas that everybody's using, those formulas came out, we were still in the gold standard. Sorry, I mean, you got to adjust with the times, and that's part of the problem. Part of the problem is people can't adjust to the times. We're going to talk about the 4% rule. 4% rule. Trinity study. Type in Trinity study, Google it. That's where all these financial advisors are getting it from. That's why they legally are going that direction, because they're going to that study. I mean, and let's face it, I posted some study from a professor and I got told I was wrong still. I don't care if you believe me or not. Really don't. You know, if it takes me, more than 2 or 3 minutes to answer your question, I'm just going to delete it. Sorry, I just don't have time. Don't have time, right? So 4%. I don't live on the 4%. I clearly demonstrate I live on 8. My funds are making me 13. I live on 8. I've stress tested them that, hey, I can get more out of certain funds. I'm good. So 8% rule, it's a good rule. Income Factory, he talks 8, 9, 7, 8. Doesn't matter. It's all good. It's all, do that 8%, 10% max. I mean, YQQQ the other day was like 15%. And if you held it for 6 months to a year, you could squeeze off a little bit more than that. So that's a fun to just, it's like a dive bomb. But at the end of the day, you can play the game with them, right? I mean, get the distributions. You can play that game. It's not like it's a big deal if you know the game that you're playing. That's the problem. A lot of people don't know the game. I'm trying to educate. I'm trying to bring them up to speed of what the game is. I mean, I got 25%, 35% yielders. Know the game. You can't take 35% all the time. If it was that simple, they would have never shared it with us, and they would have kept it all to themselves, and the little guy would have been out of the pocket. These funds are out there now, and we should be enjoying them, but we also have to have realistic expectations. 10, 15%. Even Jay, if there's a video on passive income, the guy from Canada that lives in Panama now, Jay himself says 10%. He's on video saying it, that you can only pull 10%. Now, SPY T's 20. Okay. But I'm living on 8. Who's good? I'm good. If you're invested in it, you're probably good. I don't know. I'm not your financial advisor. But hey, live on 8. Stretch it to 10 if you have to. But, keep it realistic. That's just my thoughts. So we talked about 8%. We talked about Bitcoin. Talked about the M2 money supply, that Bitcoin's going to follow the M2 money supply. And when that starts going up, it's going to raise all boats, including the stock market. Happened last time, happened this time. All you got to do is go look at the M2 money supply, and you just watch that stock price just go right with it. All right. So anyway, that's that. Let's talk about funds that are going to do good with this whole entire rate cut. I did a video on TLTW. It's a shame that people just didn't pile in there. You would have been able to get 15% and your NAV would have been up, I think it was 4.5% yesterday or something like that. So yeah, you're going to piled in. Just piled in, got 15%. NAV is going to continue to go up all the way to the point that they're going to say, hey, we're to the point of not cutting rates anymore. Then it's going to flatten. Then you just grab your 15%. And as soon as there is a threat of raising rates again, I'll be the first one to sell. I won't even tell you guys how to sell. Did you not see Jerome Powell say, hey, he's going to... Oh, Jerome Powell will probably be dead by then. But anyway, he will not be the Fed chairman by the time they come back around to raise rates. He'll be retired. And he likes his job. I can see that, right? But he'll be not around. So as soon as they go back to raising rates, I'm going to jump ship, take that money, and I'll sit on it. I'll wait for him. I'll find something else. I'll put it in. I'll find something else that acts differently, that it's going to actually increase in price when the Fed starts raising rates. And there's stuff out there that does that. But it's clearly that TLT goes down with rates, and rates go down, TLT goes up. It's an inverse relationship. There's other stuff out there. Bonds. So bonds is another one. I didn't do a whole lot of bonds. Just not my gameplay. It's just not good enough money. And if you looked at the pandemic, bonds and the stocks, they floated together. So not me. Now, I do preferred stocks. I got a fund with preferred stocks. Pays just over 9%. Meets my 8. Preferred stocks. That one's going to go up. When rates go down, preferred stocks are going to go up. It's another inverse relationship. All right, so if you want a 9% payer, don't go all in on preferred stocks, but you got somebody paying you 9%. So put some money in and say, oh, the rate's going to... You put your money in now and it's paying you 9%. If they continue to pay you the same rate and the NAV goes up, and that percentage goes down, it's still 9% because you bought it at this price, not that price. So get that clear. I mean, if you put $50,000 in, you're still going to get your $333 a month. That's how it works. Yeah, the price will end up being $65,000, $70,000, but you're still going to get your $333 a month. So you're going to have positive NAV, right? So let's not worry about that. Let's not worry about stuff like that. Let's get our money, get our percentage, and live happy. All right, so Bitcoin percentage. We talked a little bit about YouTube. Been really good. I'm sharing stuff. I built that tool. Always wanted to build that tool. I had a job. Didn't have time to build it. Now I want to build a tool that I can do closed-end funds and drip back at NAV. I think that's cool. Somebody's throwing out about CLM. Oh, I'm gonna just go. There's a whole bunch of alternatives to CLM. I mean, CLM started at $170 and it's down at $70. And somebody's asking, is that a good investment? Kinda is my answer. If you play it right, yes. You play it wrong and you're demolished. I don't have time to roll the dice. I'm going to go with something a little more, I don't know, conservative, so I don't have to do it. No, I'm not gaining that whole 20% dripping at NAV. I'm gaining 5% dripping at NAV, but it's only paying me 15, and I got a steady NAV. I can live with that. Live with that. Don't try to, is the juice worth the squeeze? For me, it's not. Others, if you want to play this and be on top of it every single day and, putting protective puts on and everything else, more power to you. I mean, SVOL, if you're following SVOL, I kind of pointed out, they're putting protective puts on. I don't know if you guys are following that they're actually protecting themselves with puts. Not only are they selling, about 25% on the VIX, but they also put some protective puts on there just in case the market takes a big dump one day. They got protective puts written. So SVOL, it's paying 16%. So me scraping off my measly 8, cakewalk. Especially if you let it sit there for 6 months, 12 months, cakewalk. Because remember, I'm taking it off 8% annually off the original investment, not what it's worth today. It's cakewalk. All right, so I got a few more months before I have to start drawing, so I'm just going to say, hey, I'm going to go ahead and make this pile a little bit bigger. Give me that little more margin of safety. Right? I mean, it's all about risk. Oh, there's one. There's one. Somebody asked about Warren Buffett. And they literally made a comment. You can't invest like Warren Buffett. Really? Come on. Anybody that's not laughing at this guy's comment, he totally missed the point. You can't invest like Warren Buffett. He's a billionaire. No. You can own his stock, which is exactly what he owns. Now, he owns it differently. And this is where that whole somebody politically wants to tax unrealized capital gains, because he never sells. He takes loans against it. It's a whole entire gameplay of how you can take loans against it and not sell, so you never have capital gains because you never sold it because you got a loan against it. I've looked into that on my IRAs. You can't do that on an IRA, but you can do it on a taxable account. So there's that, right? So you can invest like Warren Buffett. Just buy Berkshire Hathaway. Literally, that's where his money is. So when you say, you can't invest like him, he's a billionaire. Well, keep that mindset and you'll be poor for life. Because obviously you didn't do your research. Obviously, I forgot, somebody called me a noob the other day too. It's like, really? Really? I just showed you the data. I literally just showed you the data. And I'm a noob. And the best part is hey, it was a great B player. And hey, it made all the right marks. It just wasn't as good as another fund. I'm not banging on you because you own that fund. I was hoping to buy it. I will this week. This week I'm going to make an investment into a new fund, and I'll share it with everybody. Before I do it, I got a 24% payer that works just like SPY-T. I've been watching it, hoping that it is what it is, and it looks good. I'm only going to buy 100 shares, hardly anything. The way I'm tracking it, if it's not in my portfolio, it's harder for me to track. So I'm going to put 100 shares in. I'm going to just reinvest it. And if it is what it is, and it's paying 24%, SPY T, as much as I love it, might find a new home in the trash can. Take that, Jay. Oh, that's right. Jay's rating the ones for that one too. So anyway, it's not like I'm getting away from him. All right. By the way, he's probably really nice, really smart. I mean, and keep in mind he's an options guy. So some things that you say to him that it might just go over his head. And it's not because he doesn't know or doesn't understand. He's in the options. He's in that option world. And sometimes you got to get out of that option world, the business world. Right? Let's face it. I'm an HVAC mechanic by trade. And I have an MBA. Mechanic with an MBA. So not only can I fix my own air conditioner, I know how business runs. Wow, that's a dangerous pair. You don't find too many high-level people that also are mechanics by trade. Like literally went to journeyman school. When I graduated high school, I threw this out one time that, hey, I did not go to college. That's because I went to refrigeration school to be a refrigeration mechanic. Then I got good at it. Then I went to work in production, building refrigeration equipment, and they sent me off to college and they paid for it. I went into the military and I was getting the GI Bill, got my MBA. Hey, all good. All these years later, I'm here. And what did it teach me? It taught me I know how to Google how to build an Excel spreadsheet to do the math for me. And trust me, I kept on having errors and it wouldn't do it automatically. And if you watch some of these other channels and it shows you the Excel spreadsheet and it goes down and it's got all these little dotted lines, how do you handle the errors? Oh, it took me about 2 minutes of a Google search and say, you know, if I put an if-then statement, problem solved. There you go. A little out of the box. And then, you do it in VBA and it makes it a whole lot easier that you can do an if-then. If it runs into this error and it's just going to make it a 0 instead of a dotted line, so you don't get the errors when you try to do any math to it. Easy enough. But trust me, if it wasn't out on Google, I wouldn't have known. I never invest in anything I don't know. And not knowing is okay, because Warren Buffett did okay. I'll do okay. Now, I think there's a lot more investments out there I need to look into. I'm going to look into some closed-end funds. I mean, somebody came out with BCAT the other day and ECAT. I'm interested. 20% payers. 20% payers. Might be something to look into. I like 20% payers. Especially when the 20% payers should do well due to the rate cut. So yes, the NAV is really beaten up now. But rate cut comes and the NAV goes up. It's another one of those plays like TLTW. Now instead of a 15% player, I got a 20% player. I'm looking for that faster horse. And, we could talk about horse racing. I think somebody talked about horse racing, right? Yeah, my dad and I used to play the horses. We used to play the ponies. We were good at it. Pat Day. I'm going to date myself. Pat Day can make any horse run faster. So you couldn't look at the program and say, that's a B horse. Until they put Pat Day on top of it. They made it an A horse. Just like that. I used to go to Delaware Park a lot. Secretariat used to run out of Delaware Park, if you didn't know that. So there was a horse called Freddy's Revenge. It was running in the Arabian category. That horse was no Arabian. Come on. It was Arabians run with the tail out. That horse did not run with his tail out. It's just how it ran. It was a D horse at best, but you put it against Arabians, and it was an A+. Now, did you go bet the house on it? No, but you could make 5% on your money every time it ran. And that ran for like 2 years before somebody pulled the plug. Every 2 weeks, you could go in and make 5% of your money every single week. 5%. But you had to know. You had to know that that wasn't an Arabian. The Arabians had the tail sticking out, and this horse ran with the tail down. So anybody that knew anything about a horse knew that that was not an Arabian. But hey, took them 2 years before they figured it out, before somebody really went to do a DNA test to prove it wasn't. And then next thing you know, I didn't even know what happened to the horse. But I was the better. They're not going to come take my prize money away. I'm taking my money and running. So there's a way to play the system, right? I lost interest in the ponies when my father passed away. It wasn't fun anymore. And there's another one. If you do play the ponies, first time LASIK, careful. You don't know what that horse is going to do. Right? For the non-pony people in the world, they're giving the horse a drug because its lungs were filling up with fluids, most of the time blood, and couldn't breathe. So now they're going to give it LASIK. Now it's going to have open lungs. Just imagine you were running and you had asthma, and somebody goes, "Your asthma is now cured for the next 30 minutes." You might just have yourself a runner. So just keep that in mind. So when they start changing these funds, and Jay's going to change a fund, and I'm not really interested in it until after they change it. And then I'm going to do a review after I see how the changes occur. But he might be onto something. Right? I mean, let's face it. There's all these different processes that you could do. Right? You know, when I'm upset, AMZ. Here's one. I'm upset that AMZ went right through its strike prices this week. Jay knows what he could do to capture us some upside potential after it went through its strikes. He knows. It's not written that way. He's got his hands tied. When it goes through the strike prices, it should be. You know who knows? It's in SPY. It's in QQQI. If it goes through those strike prices, they can take advantage of the market. It's in their perspectives that they can do that. It's not in Jay's. Unfortunately, they were first comers, but first comers with their hands tied. They just need to change things a little bit, and things will get better for all of us, I think. You know, nothing wrong with these funds. I mean, I was happy with AMZ where they were at the strikes. It was, probability was low. Market reversed. He got caught out. Nothing he could do about it. I was happy with the strikes. Nothing he could do about it. So what do? You could put some puts out there. You could get that. You could get those gains. But that's not what he can do to gain, a little bit more upside. As soon as they make those changes, those funds are going to be a whole lot better than what they are today. Now, they may go down on what they're paying ever so slightly. Okay. So you go from a 30% to a 25%, but I gain more NAV. Awesome. Awesome. Yeah, so that's a lot of stuff for Brad. Just sitting around chatting. I'll do this every now and then. Thank you for watching. Until next time, God bless.